everybody. This is Phil Blancato. I'm CEO and President of Ladenburg Asset Management, Chief Market Strategist for Mosaic. Welcome to another weekly Market Impact. I have special guests on with me today, Aidan Redmond, part of the research team. Hey, Aidan. Good morning, buddy.
Good morning, Phil.
Aidan's going to join me just a second to talk about something super cool. The world of currency is changing, and I think it'd be fun to have a conversation around digital currency and where it's all going. Just quick update personally. I mean, kind of an interesting weekend. This is a long story. As a kid, I caddied as a golf caddy to make extra money. I was 12, 13 years old. Never played a lot of golf, more of a swimmer, baseball player, soccer, football. Played a little bit here and there. And I probably my whole life played, I don't know, once or twice a year, being a solid 100 golfer, maybe a little worse. But I'm trying, it's one of those lucky list of life items. I'm trying to be a bit better golfer. So I actually played 9 holes of golf by myself yesterday, and guess what? I'm still terrible. Well, that was fun. And the weekends for us, we've had this stretch of weather that's just been amazing. It's coming to an end. Slowly trying to get some rain. We need some rain, but we actually have just had one glorious weekend after another. Sunshine and warm. Although this morning in New Jersey, where I live, it did hit high 50s. Aiden's up in Boston. I'm sure it's pretty chilly up there too. No Georgia football to talk about, but for those of you who might share my New York sports dismay, now I am a Rams fan. Since I was a kid, I was always a Rams fan, but I've always liked the Giants. I'd say 51-49. Probably nowadays, as I've gotten older, 75-25, more Giants than Rams. And the Giants are just terrible. They got this young quarterback, a kid out of Ole Miss. Jackson Dart, they should probably start him, but once again, they lost. The Jets find a way to lose. So I think football's played on Saturdays anymore, in my opinion. But finally, my last fun story from the weekend is, I love to cook. I'm a big fan of cooking, and I would make all the sauce and homemade pasta. And so my younger daughter, Marcella, is slowly getting into the theme of things. She actually spent the weekend. She made homemade meatballs by herself for the first time. She must have called 10 times to make sure she got it right. Homemade pasta. She's very by the book. She has to follow the rules. So she went and bought special flour for pasta, which there really isn't any. There's no wrong in the flour. You can use, I like semolina, half flour, or a third semolina, more flour if you like it a little softer. If you like it a little more traditional, 2/3 semolina, 1/3, whatever. But anyway, you really no wrong. A couple of eggs, some olive oil, some salt, and off you go. She was stressing about making the pasta, but she got it right. She made it, she dried it, and she made a big pasta dinner with homemade pasta, fresh meatballs for her and her 4 roommates, and my other daughter, Luca. So how about that? I'll be down there next weekend for Alabama, Georgia. That's going to be fun. But so Marcella is following in the footsteps of using the homemade sauce, which came out really incredible this year. A lot of fresh tomatoes, a little bit more watery than I like, but really incredible. And most importantly, it was great. One quick shout out to my friends who I got to see at Connect Ed. We have this, and for those of you, I know many regular folks just listen to this podcast to get their updates. But certainly for those I get to work with, we have this annual event. It's kind of an odd name, Connect Ed, Connect Education. But anyway, I get a chance to speak in front of thousands of people. And for me, it's a great thrill to be able to talk for over an hour on the economy. And we did a fun little skit we made a mock of the Saturday Night Live weekend update. We did our own Mosaic version. It was quite fun. Credit to the CEO of the firm, Jamie Price, who came out and did a split on stage. It was quite incredible. He used to be a gymnast. And then a good friend of mine, Greg Fortune, came in as the comic relief aspect of it as well. But all things considered, everyone who was at Connected, hopefully it was great to see you all. My shout out to my friends who were there and colleagues and clients. So hopefully it was worth your while. And thanks for letting me entertain you for a little while. With that, Aidan, how was your weekend, buddy?
My weekend was fantastic. It's fall up here in New England, and when you have a toddler, that means what? It means you are going to farms, you're feeding animals, you're picking pumpkins, and you're picking apples. So anything you could have gotten at the store for 1% of the price, you're paying up the wazoo for.
Isn't
But let
that
me tell you,
amazing?
the
You're
kid's
picking
happy.
yourself and it costs more. You gotta love it.
Yeah, it is what it is. And I'll tell you, my little boy knows exactly which parent to go to get the coins for the animal feed. Never goes up to mama. Always dad has got all the quarters.
That's awesome. Are the leaves changing by you yet?
They are, but I think that's more from just how dang hot it's been up here all summer. And just one or two cool nights, we're starting to see leaves fall.
Yeah, one of the things about where we live, everybody, when the weather gets dry this time of year, and we don't get a lot of rain, it's already too late. The trees will change really fast and drop real fast. So one cold snap and and you don't get the vibrant colors. We needed a couple good soaking rains here, and we didn't really get them. We've been dry since mid-August, pretty much. And fortunately, that means that our fall season probably won't be as vibrant. I think Vermont, especially, is in a bit of a drought. Now, when's the rain coming this week? We're going to get rain all week, but it might be a little too late. But that's okay. We'll still, I'm sure, get some of the big oaks. They turn these bright red. It won't last as long, but they'll be a lot of fun. All right, Aidan, today we're going to talk a little bit about stable coins, and maybe you can give everybody we did a research everybody on what a stable coin is. If you don't know what a stable coin is, that's the point of having Aidan on today. Aidan, what exactly is a stable coin, and then how is it different from other currencies or digital product like Bitcoin?
Absolutely, Phil. So, a stable coin is a digital money designed to maintain a steady value, and it's usually pegged to safe assets like the US dollar or short-term treasuries. So, unlike Bitcoin, which can swing by thousands of dollars in a single day, stable coins are engineered for their predictability. That makes them far more practical for things like buying groceries, sending money to family, or paying employees. Now, where stable coins stand out is that they merge, the two worlds between those cryptocurrencies like Bitcoin and digital money, the stability of the dollar and the efficiency of blockchain. So Bitcoin is often treated like a digital gold, something to invest in or speculate on, while stable coins function more like digital cash, so usable in everyday life. And this starts to explain why stablecoins are now accounting for the majority of crypto transactions, because at the end of the day, people prefer a digital currency that can rely on payments rather than one that might lose 10% of its value overnight.
So that's critical here, everybody. That it is a way to do electronic transactions, but backed by the dollar, so you don't get this extreme volatility. How do they work? Fundamentally, how do they work?
Yeah, sure. So how do they work? So for every stable coin that's in circulation, there should be an equivalent dollar or safe asset held in reserve, as I just mentioned. So if 10 million tokens exist, there should be $10 million for US Treasuries set aside to back them. And independent auditors are checking these reserves to ensure the system is trustworthy. The second layer is blockchain itself. And I mentioned that initially in my comments, but I didn't tell you what it was. And that's a digital ledger that records transactions across thousands of computers. So once a transaction is written in, it can't be easily changed. So that helps prevent fraud and that builds confidence. This is what allows those transfers to settle in seconds at any time of the day, and often for pennies instead of some of the high fees that are charged by wire services. You can think of it this way: the reserves guarantee that your digital dollar is real, while the blockchain ensures that the movement is fast, secure, and inexpensive. So together, these two elements allow for stable coins to behave like your average greenback without relying on the old, slower banking rails.
So that's fascinating. So kind of here where we are, everybody. You have a new way to transact actions. Let's say you want to send somebody who lives in Italy, and in seconds you can send them money from anywhere in the world. Where imagine if you went to the local bank and tried to do a wire, it takes much longer. So it's a way to speed up transactions. It's backed by the U.S. dollar. It sounds like to me, it just makes movement of money more efficient. Is that safe to say? I mean, beyond speed, what else is it good for?
So one of the things I think is really cool about it is that it can bring that financial access. You kind of alluded to this a bit, to people who are underserved by traditional banks, and all that's required for them is a smartphone and an internet connection. So you talked about, sending money back to Italy, but like another example you can think of is like in the US here, you've got a gig economy worker. They don't have access to direct deposit. So they're being paid instantly with this instead of waiting days for that paper check to clear. Another way to think about it is there's a lot of families who rely on some costly check cashing services and without utilizing those services and using the stable coins, they're able to keep more of their paycheck since stable coins move more directly without the middleman fees. One of the other cool things that we've seen this year is Wyoming's Frontier Stable Token, and their pilot adds another layer. So not only did the payments that they use settle in seconds versus like the 45 days that Wyoming would typically have to pay for services, but the interest that's earned on their reserves, they funnel into local schools, showing how the benefits can flow back into the communities. So
That's
by cutting out delays, reducing costs, Well, stablecoins could provide more financial stability to everyday households while also creating these broader community benefits.
So would that be that's interesting though. If Wyoming has its own stable coin, will that coin work with I don't know, New Jersey stable coin if they ever launch it? I guess we'll have to figure that stuff out as we go. But it is fascinating, everybody. It's a way to make things faster. In a world we're already fast, we're trying to make things faster. And for those of you who don't know what the blockchain is, basically, blockchain's been around forever. Like to use this analogy, and I've used it a lot. It's just imagine you're out in a farm community, you have those baskets on the farm, and they fill the basket up with pumpkins, and it's got a little digital code on a little code on the side. Well, every time that basket gets put on a truck, that code gets logged in. That basket gets logged in. Let's say you put 20 on a truck. Each basket has a different series of numbers to track it. Then that truck goes to a distribution center. It gets logged again. And then maybe it goes on an airplane and flies somewhere. It gets logged again. And then it goes to another distribution center. It gets logged again. And then finally to your local supermarket. It gets logged again. Then you bought it, and that's the last log. So in other words, the blockchain is the series of events that are connected together by a code. It's really quite simple. It's really not that complicated. And now you've made it instead of a truck driving around pumpkins, do it with a digital interface with hundreds of computers or thousands of computers. So that's fascinating. What is the next step? Because now we're talking about something called tokenization, which is could be gigantic for the marketplace. So first the stable coins, which lead to tokenization. What is tokenization?
So that's a great question because it is the next iteration. So tokenization takes that same idea behind stablecoins, but then applies it to other assets. So instead of just creating a digital dollar, tokenization turns real world assets such as real estates, equities, or bonds into these digital tokens that can be more easily traded, divided, or transferred. So think of it as another way. So the market right now is worth about $250 billion, which is the same as some of the larger banks. So Morgan Stanley is about 250 billion in market cap. Their expectation is for that to expand to as much as 30 trillion. And again, that's a very sensationalized number. Most estimates are really in between like 10 and 15 trillion by 2034. But the impact more broadly could be really transformative. Like tokenization makes the traditionally illiquid assets more liquid and accessible. You know, think of a Manhattan skyscraper. Normally, it's only institutions or wealthy investors who could buy in. With tokenization, that building could be divided up into thousands of digital shares, allowing everyday investors to participate, just like we do with stocks today. It could also mean, speed up settlement, reduce paperwork, making global investing as easy as, sending an email. In short, tokenization is just the natural extension of stablecoins. Once you digitize money, the next step is digitizing everything else.
Let's use the examples of the family business. Let's assume you're in Iowa and you all make a really cool widget. What could be a good product in Iowa? You make I don't know, wagon wheels. Just go old school. And let's say your wagon wheel company in Iowa does $30 million a year in revenue. And you decided you want to take some money out of the business. You don't want to be the sole owner, you want to have other owners. Well, rather than look for local buyers of your company, which may own a board seat and things like this, you could take it and say, okay, if my business is worth $30 million, I'm going to have 30 million tokens. And based on those 30 million tokens, I'm going to sell them in the marketplace at any time, anywhere I want. And I'll ultimately get to a scenario where, in fact, I could have a digital market for part of my company, some piece or all of it. Really does change the narrative around how we conduct business. It may change everything about, think of the Mona Lisa. What if someday and it's a kind of a bad example, what if the Mona Lisa went up and they want to sell just 1% of it? Or a football team. The New York Giants tried to sell $1 billion of the team. You could actually sell it to hundreds, if not thousands of people in the version of a token rather than just one person out of a billion. So really quite fascinating. So just to sum it up, what's the Genius Act? Because that had a lot to do with the kind of this transformation. Talk a little bit about what that is, and maybe a little bit about the risks and what the benefits might be.
Sure. So the Genius Act was passed earlier this year in 2025, and it provided a regulatory framework that required and regulated stablecoins to be fully backed by cash or treasuries with reserves independently verified. So this created this a strong foundation of trust, giving both consumers and institutions confidence that these coins are safe. Um, Safe is a difficult word to discuss, but because there are risks that remain. So stable coins that there are not FDI insured, so there's no government safety net if something goes wrong. There's cyber threats and technical flaws can be real possibilities here. The rules are still evolving, meaning regulations could shift in ways that affect usage. At the same time, we've talked about this. The opportunity is enormous. Stablecoins allow instant, low-cost global payments, and have laid the groundwork for the tokenization market worth trillions. The future here only depends on balancing speed and innovation with security, transparency, and thoughtful oversight. The Genius Act is the first real big step in getting us to the next level.
I think a lot of people are going to struggle with this, though. The idea of not using the dollar or using some digital code is going to be some very hard for them. Or better yet, privacy. I mean, when you do a private transaction, you buy a piece of a skyscraper, no one knows about it. This will be fully open and everyone knows about it. So, does it lead to the digitization of the dollar? Meaning, does the dollar suddenly become no longer paper money? And I think folks would struggle with that. So, there's a lot of things coming out of this, but you're staring at the future, everybody. The future is digital money. I bet, folks, and we have thousands of people listening to this podcast. Thank you for listening, including Stella, who was just barking in the background. Sorry about that. Hope you didn't hear that. But I'm home today trying to get some things before I go on a long business trip. But when I think about the future of currency, it seems quite inevitable. And I would bet a lot of people who listen to this podcast use Venmo. Venmo is a precursor to it. Now, Venmo is you transferring real dollars, not a token or a stable coin, but it will, and if you've gotten the hang of it, and I know my kids, I mean, if we put 100 kids below the age of 25 in a room, I would guess the collective amount of liquid paper they'd have on them, if it was more than $250, $10 per person, I'd be shocked. Or zero. Most are zero. And I think that's our future. So for older folks like me, 58, it seems to be that I like having money in my pocket. It's just the way I roll because I'm used to it. But I think the next generation is going to fully embrace this. But I do think from a commerce standpoint, I love your opinion, Aidan, the ability to bring liquidity to an illiquid space, making things liquid very easily is really fascinating.
Yeah, it certainly is, and you bring up a good point. What is the adoption level of the folks who are in their late 50s to folks who are elder millennials like myself? I still love carrying cash in my pocket, and there's nothing better than having all the dollar bills facing the same way in your wallet. It's just something that I grew up with. So, watching that transition to the next generation is going to be very interesting. I mentioned that even though we were at the farm this weekend, that goat feeder did not take stablecoin or the Wyoming token. So you're still going to have to carry coin on you. It all depends on who's going to be able to collect it. But in terms of commerce and transactions and making markets more efficient, this is certainly a very positive transition.
Without a doubt. Aiden, thank you for joining me. You're welcome to stick around, listen in. Maybe I'll ask you for your shout out of the week at the end. I have a couple, but please, you're welcome to hang on for a minute. So I'm going to give a quick economic update. Well, that finally happened, everybody. The Federal Reserve cut interest rates. Last week, we saw the Fed finally cut. And if you listen to the comments by Jerome Powell, the chairman of the Federal Reserve, he basically said that, this was a quote unquote maintenance cut, that interest rates were too high considering where current levels of inflation were, but he's still very concerned that inflation is actually getting a bit hotter. And this week, PCE comes out. Remember, I care a lot about PCE, personal consumption expenditure. And the reality is goods pricing are up last 5 months in a row. We're seeing inflation in places like service sector. So we're not out of the woods from an inflation standpoint. Now, it doesn't mean inflation is going back to 4% or 5%. That's not the case. But certainly it does mean that we have a scenario where we have a problem that you can't only cut interest rates so much if, in fact, we have this challenge, the challenge of interest rates being, or inflation, excuse me, being a bit higher than we want them to be, makes it difficult to cut rates. The reason why they cut was because of the concerns about the labor market. And we did see labor market data last week, weekly jobless claims and continuing claims really still be okay. Nothing of great alarm. In fact, there was this issue a couple of weeks back that Texas had an unusual spike in number of folks applying for benefits, but that was a 1 week phenomenon so far. But certainly there are concerns about the labor market. What you wouldn't want to have happen at a time when valuations are high. Remember the price to earnings ratio, the current price of stocks divided by how much companies make is quite high. It's significantly above the average. The average of 18, stocks are trading at 23. So it means stocks are not inexpensive. And you have a scenario where the Fed cut wasn't really what the market wanted. Now we were up a little bit. We've traded kind of sideways. Today we're down. It was a pretty good week, and I'll get into that in just a second. But we did get what we wanted from the Fed, the first cut, where the market wanted for the first cut. We did see at the same token, retail sales was a great number. Surprisingly, the U.S. consumer is still hanging in there. We expected a -2 for the month, and we got retail sales increasing 0.6. So it's a really significant turnaround. And we revised July's number up a little bit. So it really was quite good. In fact, core retail sales, which exclude gas and autos, also came in at about a zero point 0.7. So that's an excellent number. It shows the U.S. consumer at a time when August can be a bit of a squishy month. Not it's the end of the summer, back to school season's begun. We saw the consumer spend quite prolifically. Don't forget, back to school, depending on where you live, is mid-August to mid-September. And then at that, it's a $10 billion spending holiday, followed up by Halloween, which is another 10 to 12 billion, followed up by the holiday season, which could be as much as 975 billion, total of $1 trillion or more. So far, the U.S. consumer is doing exactly what we needed to do, holding up the U.S. economy. The spending is far and away more so with older folks, folks above the age of 65 who are flying in first class rather than economy. But the rest of the economy did much better than expected. So that was really quite good news. And in fact, when you think about the data, we were expecting things to be much worse than what we got. And in reality is while inflation is still a bit stubbornly high, call it, things we're buying every day still running at around 2.5 to 3%, depending on the goods. Tariffs have yet to really cause significant inflation. Remember, we think tariffs are still a one-time price hike, but have those price hikes come yet? Are companies still waiting to raise those costs? And with the real resolution still not really done, we have two more seminal dates there, October 4th for the latest renegotiation with a variety of companies, and October 5th, the price of goods coming in that were in the midst of some of the tariff battles and where they stand. The early October data will tell us a lot. That means will the Fed cut again in October? Unless we see a weakening of the inflationary data, and with tariffs going around, I don't think we do. I doubt the Fed cuts in October. Now, expectations are that they will. I think they will cut if we get a weakening of the labor data, but that seems unlikely. You got to be careful with the labor market. There's a lot of unknowns right now. Does less immigration mean less jobs? Are we seeing any rise in layoffs? We're not. So we'll get to that next week when we have more labor information on labor. But for now, the Fed did cut. And what did it do for markets? Well, S&P's ripping. I did not think the S&P would get up to 14.39% in the month of September, usually the worst month of the year. NASDAQ now up 17%. That's a big number. You know what the winner in the week was? Small caps up 2.19% now. Believe it or not, small cap stocks are up almost 11% on the year, closing in on the S&P 500. Now, we'll see if we can catch it or not. If we get another rate cut or two, oh yeah, they're going to catch it. International markets were actually off on the week, very little, but still up 24% on the year. You know what had a really good week too? Bonds still hanging in there, flat, basically flat on the week, but still up over 6% on the year. So what you've seen is that this really impressive markets have hung in there despite of kind of this terrible sell-off because of what we had with tariffs back in that, call it, March, April timeframe. And even with the unknowns of tariffs still being out there, it hasn't really led to any real concern. We haven't seen a real issue with any of this. So I guess my point is that we have a scenario today where I don't think we need to panic because it's September. Usually September is a pretty tough month. The data continues to be fairly strong or strong enough, especially that retail sales number was quite impressive. And the reality is the reason why international markets are beating U.S. domestic markets is the dollar weakened. Why did the dollar weaken? Because of the expectation that the Fed was going to have to starting to cut interest rates was really the driving force behind the cut. I did see a couple headlines which grabbed my interest over the weekend. First off, believe it or not, in money markets, there's still over $8 trillion in cash. And while yields in money markets have come down for, call it 5.25 to just about 4, and probably going to go down to 3 and eventually 2.5 over the next year and a half, folks are still leaving their money in cash. And if that cash comes into the market, it's going to push significantly higher. But for today, still very much in cash and not causing any great stress as far as where's that money going to go is going to create over exuberance in the market. For now, folks like getting their cash and they like getting paid to be in short-term cash. There was an interesting piece I read, a research report about cardboard. And cardboard's a big one. Cardboard because we got cardboard, i.e. Amazon and everything else we buy, and Walmart trying very hard to catch them. Cardboard sales are down, actually down to the low of 2016, where normally we're shipping around 1,500 cubic square feet of cardboard. We're only shipping around 1,100 right now. The 1,500 was during the pandemic when everyone was buying stuff and shipping it to their house. Now we're back to a low. Is that because folks are going back to stores? Is that because Amazon's using more paper and plastic to ship things? Is a combination effect here. But overall, the numbers are a bit softer than expected. And what does that mean? It means the potential for, having maybe a bit of a softer holiday season. Let's see if that plays. I don't think so. I think there's more at stake here, and I do think August tends to be a softer month in general. So let's take that with a grain of salt. Let's not get too overly worked up about it. But when you look at the current market, it's a bit like Goldilocks. There's not a lot of concern right now. The tariff resolutions or lack thereof, or some of them, I should say, are sort of working themselves through the system. It looks like U.S. and China are in advanced talks around TikTok, not resolved yet. I know my kids would like to see it resolved, but not resolved yet. And then beyond that, you have a scenario where it seems like the tariff negotiations are still working themselves through Europe, not quite done, but better. Mexico and Canada, less noise around it. We'll see in the coming weeks here. The India situation is not great. Having a high tariff on India is not great. And certainly Russia, Ukraine hasn't been resolved yet. But I do think there's something to be said for, um, kind of a Goldilocks moment. Nothing too concerning about it. And surprisingly, September's hanging in there. And usually September could be a tough month. I wouldn't be surprised if we get a sell-off in October, though. If the Fed doesn't participate the way we want, usually you get a healthy sell-off this time of year, 5 to 8%. It's still, to me, when stock market prices are high and the economy's just chugging along doing fine, U.S. consumers holding us up. But any kind of change in that, a hawkish moment from the Fed, meaning they're not going to cut rates because inflation's too high, or the unemployment market weakening greatly, or an earnings season which starts in October being softer than expected, let's be careful. Have balance. Why? The bond market's up 6% on the year. Small caps are on the cusp of catching large cap. International stocks, while being flat recently because of potentially lower regulations, some spending on defense, their rates are already lower than the United States, could be the turnaround story in Europe. So you're looking at opportunities to do other things. So I'd wrap up this week by saying really strong retail sales. The Fed gives us what we want. It is a Goldilocks moment. Don't fall asleep at the wheel. Have balance in your portfolio. It's important. One thing I saw about Russia, Ukraine, which was a fascinating article I picked up over the weekend, was that the reason why Putin doesn't want this war to end, because economically Russia's a mess. If you look at the total GDP of the countries that used to be part of the Soviet Union, and you add them up, their collective GDP is greater than that of Russia's today, where Russia was far and away the biggest GDP when they were all exited out. So from an economic standpoint, Russia's in trouble. Russia does not grow economically. They haven't grown in a long time. The number one thing they have is oil at a time when the rest of the world is trying to end this war through oil embargoes, which is why, by the way, India has a big price tag on it today because they continue to buy Russian oil when the president would prefer they don't. It's amazing to me how economics come back to everything. Baltimore. Baltimore is a pretty tough city. Baltimore's population is down almost 50% from 1950. They don't have enough people living in Baltimore. And yet their crime rates this year are down anywhere, depending on type of crime, rapes to violent crimes to murders, 10 to 20%, in some cases even more. Why? Because one, you have less people, and two, finally, you're seeing a bit of a stronger police force there, stronger actions in curtailing crime. And it's amazing how economics matter. As economics turn around and businesses are slowly making their way back, new housing projects, guess what? You see less crime. Is it police or is it economics? I'd argue it's economics. Police can only do so much. I think economics can be the driving force of growth and less crime. When you look at places like Russia, which have really one product they produce anymore, which is oil and gas, and when you have less of that, you have anger, in this case, war, in this case, Putin trying to take over Ukraine because it's the breadbasket of Europe. So just something to think about how economics can have an impact on just about everything. For example, Poland, as a size economy today, is bigger than Russia. So you have a scenario where countries who are call it what it is, democratic, capitalistic, non-war based countries do a heck of a lot those better than those who are communistic. Look at the overbuilding in China and how China is a very overbuilt situation. And that day of reckoning is yet to come. How their population is shrinking, not growing because of it. A lot they talked about how economics can tie their way back to, in my opinion, just about everything. Time for my shout out of the week. Aiden, do you have one? I have three this week, sort of three. I'll let you go first. Anything come to mind about you want to celebrate this week?
My shout out of the week comes to the New England Patriots and turnovers. They had 5 turnovers on the week. Hopefully they can clean that up and maybe next week have a win. But again, grew up a Patriots fan. It was a good 20-year run. I know the Giants beat them twice in the Super Bowl, but it's I'll still take it.
Okay, I'll give you that. This is UN week in New York City. Word of advice: don't come to New York this week. It's a terrible time to be in New York. In fact, the next 2 weeks, because it kind of dribbles, fades away slowly. It's a terrible time to be here. The restaurants are overwhelmed. People everywhere in the streets are closed. You can't get around. Not the week to come to New York. Just 2 weeks I would never come. The second week of July, maybe third, and this week there just and Christmas could be a little tough too. Christmas, see, holiday season it's really crowded there, but at least it's fun. But this is not the week to come. UN week, I'll be in the city just tomorrow and then traveling, and at that I wish I wouldn't have to because it's such a bad week. I love my city, but it's a tough week. I've got two things I want to mention this week. First, I'm not a political person. I'm apolitical. For those who listen a lot, I do not take a side on politics. Presidents are less relevant to economics than people think they are. The economies are cyclical. I will say, tariffs traditionally in the United States generate about $100 billion in revenue. You're looking at 300 billion to $500 billion in revenue. That's a big number. Will that help supplement some of our deficit issues? Well, interest payments alone are 1.3 trillion. So we couldn't tariff our way out of our interest payment issue. You can't tariff our way out of our annual budget deficit issue. You've got to retain real and spending. So it's had to have a little impact, not a lot. Okay, so I'll give you the president has some tariff issues. But by and large, economies are cyclical because of consumer health, almost anywhere in the world. So I say that because I don't want, I'm apolitical and don't really care. But I was really left personally impressed by the outpouring of emotion around Charlie Kirk. And I'm not going to pick a side here. I'm not going to tell you he was a good guy or a bad guy. That's for you to decide personally. But when you watch millions of people around the world have an outpouring in probably both directions of what you thought of him, there's something to be said that people who can stimulate millions, and I do applaud Charlie. And I will say that whether you agree with his point of view or disagree with it, the man, as a very young man, had the power to stimulate millions of people into whether it's believing in church. I'm a local Catholic kid. I do believe in God. That's just personal. You can believe whatever you want. Maybe you're spiritual. Maybe his teachings will make you more spiritual. Or maybe you don't agree with his directness and abruptness and the challenging of the norm. But it made us think, didn't it? And to see his wife forgive the person that murdered him, if that's really who murdered him, and it comes to pass, that takes tremendous courage to do that on TV in front of millions of people. So my hat's off to the Kirk family. God willing, those little kids will grow up to be strong people without their father. That's the sadness in all this. I see two young people, two little babies, not have a dad. That's the worst of all this. And to the Kirk family, I wish them well. So my shout out of the week, number one, is to the Kirk family. I hope they find a way to move on and survive from this, and applaud Charlie for stimulating millions, whatever way you see his stimulation. And the other one, Clayton Kershaw. I always like sports. I'm a sports guy. I can't help it. But it's something to be said. We're watching greatness in a lot of places today. Whether it's Mahomes, got to give it to the kid. He's incredible. Beat the Giants. The Giants are terrible. But still, greatness. And if you get, I regret not going to the game last night. I was here at the Meadowlands. I always like to see a super star before they're gone. I never caught Kershaw pitch. But and he just announced his retirement in a very quiet way. He's going to retire with a record of 222 wins and 96 losses, a 700 winning percentage. His lifetime ERA is 2.54. And the guy did it so quietly. He hardly knew about it. And won a World Series. Can you imagine the guy was a 3-time Cy Young, an MVP, and 5 league ERA titles? That's greatness. That's fading away without even realizing. So my hat's off to Clayton. What a heck of a player. That guy, he's no joke. Real legit. And with that, I hope you had a wonderful weekend. I hope you did something fun. And I hope as we fade into fall, you get ready for some really good football even though the Patriots, the Jets, and Giants are terrible. Sorry. But I'm all about those Georgia Bulldogs and those Penn State Nittany Lions. Alabama this weekend. Go Dogs. This is a big one. I would love to beat the heck out of Alabama. That's always fun. Those guys have won way too much. Aidan, thank you for joining me this week, buddy. Thanks everyone else listening.